One of the biggest misconceptions that beginners have is that trading and investment are the same. They are not. If you ever wondered if you would like to become an investor, a day trader, a swing trader, or even a scalper, this video helps you the differences they have and will help you to understand which one is right for you. By the end of this lesson, you will learn which style fits you better, which one fits your schedule, your goal, and your time. Let's start with what is investment. Imagine you buy the shares of a company because you believe that this company over the next 10 years or 20 years will grow. For example, you buy Apple's stock because you believe that this company will grow during the next decade or so. That's why this is called investment. You're investing in the company's future. Hence, you're not worried if the price of the stocks drops next week or so, because your goal is to stay long term. You want to see during the next decades how the company grows, and based on that growth, you would be able to profit. For example, you invest in buying S&P 500, or you buy a stock of a company like Apple. The good thing, or one of the advantages of this, is that there is not much of a stress because you are prepared to stay long term for many years. When you make such an investment, you usually get dividends after a year or so, depending on the market, depending on the stocks or the company that you invest in. What you can do is to withdraw those dividends and use it for your personal purposes, or you can reinvest those dividends and let the investment compound during the time. Some of the characteristics of investments is that it is involved in the long term, a decade or more. That said, there is less stress because you don't need to look at the market every single day. Historically, you will get more results with patience over a bigger time span. You spend less time and you benefit from compounding. Some of the advantages of investment is lower emotional pressure. You don't have to constantly look at the market. You don't have to analyze the market on a daily basis. That's why it's easier for beginners. Hence, you would be able to compound over time. The disadvantages are it requires a lot of patience. You have to be very patient for many years until you would be able to get any results. Hence, it has a slower wealth building. On the other hand, trading focuses on getting advantages of a short-term price movement. Instead of waiting for years, you're looking for opportunities in weeks, days, hours, or even minutes. The main difference is that trading is active, but investment is passive. Investment asks what this asset would be worth after a certain amount of years. Trading asks what's the price going to move from here. One way of trading is called swing trading. Swing trading usually takes from a day or so up to a couple of weeks. For example, a swing trader can take one trade per week or one trade per 2 weeks. In my opinion, swing trader is best for people with full-time job or beginners or people who don't have time to be active in the market on a daily basis. The advantages of swing trading is it is less stressful, more flexible. You take fewer trades, spend less time in front of the charts. The disadvantages are overnight risks, over the weekend risks, and requires a lot of patience. The next concept is day trading. A day trading means you take a trade in one day and you close that trade within the same day. Nothing stays overnight. The advantages of this way of trading are no overnight exposure, more opportunities in the market, and faster feedback. The disadvantages are more screen time, mentally demanding, and easier to overtrade. The next way of trading is called scalping. Scalping can be from seconds up to minutes or maximum an hour. The goal of scalping is to get smaller profits but many times. Advantages are no overnight exposure and many opportunities. Disadvantages are extremely stressful, strict discipline, fast decision making, and higher transaction costs can matter. While many traders can benefit and be profitable from scalping, this way of trading is the most demanding for beginners. In my opinion, there isn't the best approach. The best approach is the one that fits your personality, your time and schedule, and your goals. Someone with a full-time job may prefer swing trading, and someone who is more active in the market and would like to have a more daily analysis can use day trading. But the strategy that I eventually teach is designed for consistency and disciplined decision making rather than constant trading. Before we get there, we need to build the foundation. In the next lesson, I will be speaking about risk warning and the reality of day trading these days. I will tell you about why 90% of people lose constantly in the market, what is the reality about prop firms, social media fake lifestyles, and what are the expectations in a real form. And that said, I will see you in the next lesson.